Okay, let's dive right into this explainer. What if I told you that the absolute best, most proven secret to long-term wealth isn't some highly complex trading algorithm, but literally the dirt beneath our feet? I know, it sounds a little crazy, but think about it for a second. The timeless principles of agriculture actually hold the ultimate blueprint for financial success. Today, we're exploring the laws of the farm to see exactly how wealth creation is really just a natural, systematic process.
So let me ask you, would you plant a mango seed today and expect a full harvest by next week? No way, right? It sounds totally ridiculous. You would never expect that. But honestly, this brilliantly illustrates exactly what so many of us do with our money. We put our money into a stock today and we genuinely expect it to double in just a matter of months. And when that impossible timeline isn't met, well, we get impatient, we sell, we switch strategies, and we just end up deeply disappointed.
The hard truth is, nature cannot be rushed, and neither can wealth. The reality laid out so clearly in our source material is that investing follows the exact same natural laws as farming. It requires immense patience, discipline, and the understanding that, look, you just cannot force the seasons to change any faster than they naturally do.
Which brings us to Section 1, the farming illusion.
We really have to confront this modern temptation of get-rich-quick schemes. Just look at the mindset of a farmer. They are inherently patient. They follow the seasons, knowing there's a specific time to plant and a time to harvest. Now contrast that with the impatient investor. It is so easy to fall into this trap, isn't it? We get so frustrated when our stocks don't immediately double. We start chasing whatever hot stock is making headlines that day. But a farmer wouldn't rip up his entire field just because the crops didn't sprout in 3 days. We absolutely have to align our expectations with reality.
Moving on to Section 2. Phase 1, preparation and planting.
This is that crucial stage where we choose exactly what to plant, and just as importantly, when to plant it. And that brings us to law number 1. You reap what you sow. A farmer who scatters poor quality seeds absolutely cannot expect a bumper crop. The harvest is dictated by the seed. In the exact same way, the source tells us that investors who just throw their money around without doing the research or having a solid plan shouldn't expect exceptional returns. Your good seeds are quality assets. We're talking about investing in strong businesses, high-quality mutual funds, and sound financial assets. The quality of your harvest begins entirely with the quality of what you plant today. And here is law number 2. Plant early, harvest more. If we map out 2 different starting points, say age 25 versus age 40, the person starting at 25 has a massive, and I mean tremendous advantage. And here's the kicker. It's not necessarily because they're investing more money. It's simply because they're planting earlier in the season. They're giving their money a much longer runway to grow. That long runway is absolutely vital because of compounding. You know, it's often called the 8th wonder of the world. It's this incredible process where a small amount invested regularly over a long period just snowballs into substantial wealth. Time is quite literally the fuel for compounding. As an investor, time is your most valuable asset. Way more valuable than trying to perfectly time the market.
All right, Section 3, Phase 2, nurturing your investments.
Once those seeds are in the ground, we enter the growing season, and this requires a whole lot of faith and consistent care. Law 3 is actually a beautiful metaphor. Growth happens underground first. When a farmer plants a seed, for days or even weeks, the field looks exactly the same. It looks like absolutely nothing is happening. But beneath the surface, those crucial roots are developing. We have to acknowledge that the early years of investing can feel painfully slow. Your portfolio might not show any dramatic growth right out of the gate.
But here's the secret. Even when market returns seem totally insignificant on the surface, powerful mechanisms are quietly working behind the scenes for you. First off, your dividends are being reinvested. Second, the underlying earnings of those businesses are growing. And third, compounding is just quietly doing its job. A lot of people quit during this phase because they can't see the immediate results, but successful investors know that wealth is built long before it ever becomes visible. Now, think about Law 4. A farmer doesn't just flood their field with water on day 1 and then walk away for the rest of the year, right? They water the crops regularly. The direct equivalent for us is systematic investment plans, or SIPs. It's all about providing that consistent care to your portfolio. SIPs are incredibly powerful because, let's face it, investing isn't about those occasional bursts of enthusiasm when you happen to get a bonus check. It's about consistency.
SIPs develop financial discipline. They completely remove the stress of trying to time the market. And brilliantly, they automatically buy you more units when the market falls, utilizing what's known as rupee cost averaging. In the long run, small, regular investments will almost always completely outperform large, sporadic ones.
Which takes us to Section 4, Phase 3, Protecting the Farm. As our crops grow, we have to actively defend our wealth from external shocks and, honestly, our own internal mistakes. This brings us to Law 5, Ignore daily weather changes. Farmers know that heavy rain or sudden temperature shifts are just temporary weather. They don't panic and burn their fields down when a storm rolls in. Well, the stock market has its own weather too. Market volatility, crashes, those fear-inducing news headlines. A temporary market correction doesn't mean your entire long-term strategy is broken. You just cannot let short-term weather dictate your long-term decisions.
To protect against that weather, we use Law 6. Diversification is like growing multiple crops. An experienced farmer grows different crops, so that if one happens to fail, another survives. Spreading your money across different asset classes, things like equity mutual funds, direct stocks, bonds, gold, or real estate investment trusts, they all serve different purposes. Now, it doesn't eliminate risk completely, but it creates a massive protective buffer for your financial harvest against unexpected setbacks in any single sector. But the weather isn't the only threat out there. Law 7 tells us we must remove the weeds. Every single farm attracts weeds, and if you ignore them, they'll steal the nutrients meant for your healthy crops. Think about toxic investment weeds like emotional investing, fear-based selling, greed-driven buying, excessive trading, and chasing trends blindly. These behavioral mistakes will literally choke out and consume the long-term returns you've worked so incredibly hard for. You have to actively pull these bad habits right out of your routine.
Finally, Section 5, Phase 4, the harvest.
This phase is the ultimate payoff for all that discipline, care, and immense patience. But before we start celebrating, we really need to look at Law 8, which comes with a severe warning. Don't cut down the mango tree before it matures. The absolute biggest mistake an investor can make is harvesting too early. If you're constantly buying and selling, you are essentially chopping down the tree before it can bear fruit. You're completely destroying years of future gains. The biggest harvest always comes to those who wait. And patience isn't just sitting around. It's actively allowing time to work in your favor. So, ultimately, wealth creation is a highly systematic process. Plant quality seeds, start early, invest consistently, ignore the short-term noise, diversify, remove your emotional weeds, and give compounding the time it desperately needs. If you do the heavy lifting of following these rules, nature and the market will absolutely take care of the rest. I want to leave you with this final thought, beautifully stated in our source material. Wealth, like a successful harvest, is not created overnight. It is grown patiently, season after season. It really is that simple, and yet so profound. You have to shift your mindset from getting rich quickly to systematically growing your wealth.
Which leaves us with this final, incredibly important question to ask ourselves. Are you treating your investments like a casino, just rolling the dice and hoping for a quick jackpot? Or are you cultivating them like a farm, with patience, strategy, and care? Take a moment to really reflect on your own financial habits. Thank you so much for joining me on this explainer, and until next time, happy planting.